So for more insight into the state of the Russian economy, I'm now joined by Jochen Wermuth. He's founder and CIO of Wermuth Asset Management. Thank you very much for coming in to speak to us. So I actually wanted to start by asking you a little bit about your investment strategy right now. What do you like? What are you avoiding?
Well, I mean, the president is looking to get Russia off the drug of oil and gas dependency. And indeed, many of the opportunities in Russia have to do with sectors which are only indirectly dependent on oil and gas, such as the electricity sector, where you can buy today, in essence, a Russian government bond with 11% guaranteed yield on your regulated asset base at a 50% discount. So you get a 22% yield on a Russian government bond.
So is that what you're investing in right now?
Yes, that's, for example, a very nice investment to follow.
And other attractive prospects? So you don't invest in commodities, though, interestingly.
Well, obviously you can buy the Russian market more or less by buying a barrel of oil, because 70% of the index is just oil and gas related or commodity related. We are a hedge fund. We try to generate alpha. We are ahead of the market for many, many years, for 10 years ahead of most markets. This year up about 30%.
So what sort of companies are you interested in?
We're interested in companies that make money not by being a large oil and gas company, but being an oil services company, being an electricity consumer, distributor, companies that deliver food to the global shortage of food, and companies really globally that have something to do with Russia rather than just being Russia local.
It's interesting. When you compare Russia to other emerging markets, you're speaking about inflation there. Inflation may exceed the government estimate of 8% this year, compared with, say, 4.4% in China, 5.2% in Brazil. Russia grew, as we were saying there, 2.7% in the third quarter, compared with 9.6% pace in China. So it's underperforming compared to some of its emerging market peers, right?
Yes, I mean, what an opportunity. The Russian assets are about half as expensive or even cheaper than assets in the rest of the world. Price-earnings ratios for 2011 of 7, compared to China at 15 or 16. Inflation actually is, I think, at its lowest in the history of modern Russia, and it's definitely on a downward trend. We see a great opportunity to be long the ruble and ruble bonds, because inflation is on its way out really in Russia. So I think we're heading for 5–6% in 2011, and that's very good news. On the growth,
but it's still a risk to growth, right?
7.5% is, well, for an emerging market with lots of relative price adjustments, I don't see much of a risk. Of course, the target has to be to bring it down a lot. But as far as growth is concerned, 2.7 is sad, and the target has to be something like 7–8%.
So tell me a little bit about some of the other challenges facing the Russian economy right now. You were speaking about modernization, and this is something we've been hearing a great deal about from Russian politicians. But to what extent can you modernize in a country where there is one-party rule?
Well, I think the biggest changes I've seen over almost 20 years in Russia is that 98 crises brought macro reforms, great macro indicators. Russia is one of the best credits in the world. 2008 crisis brought micro reforms. We're now really changing the political system again. Corruption is being fought. And we see Japan in 1945, like Russia in 2011. It's a middle-income country, highly educated, that will have to open up, because with such intelligent people in the country, you can't really keep them suppressed with one party. You're going to have political competition.
So you think that's inevitable as the economy prospers, that Russian billionaire Alexander Lebedev had his National Reserve Bank, I'm sure you're well aware of this story, raided by Moscow police just last week, and he says he wants to petition Russian leaders now to stop police from interfering in his business. Do things like that concern you at all? Well,
first, it happens in Germany or other places as well. We have been there for 17 years without having had to pay a bribe or having to pay protection money or getting raided. So I don't know what we've done right, but we've been lucky maybe.
So from what you're saying, as an investor, you're able to operate completely independently of the political environment?
Absolutely. We have been maybe fortunate, but I think also just careful. If you behave within the rule of law, you don't have any problems. If you step outside the realm of law, you can have maybe harsher punishment than you're used to in the West. So we've enjoyed relatively good, and I see good signals coming. Say the Russians doing the Olympic Games in 2014, Russians maybe winning the World Cup in 2018. These are things that indicate Russia wants to have a free trade zone with EU, free movement of goods, no more visas, free movement of people, common security, common education. Russia's asked for EU membership, for NATO membership. They're looking to get in here. And I think we should welcome them, just like Germany was welcomed after World War II. You know, in fact, the current Russians defeated the Soviet Union. They canceled the Soviet Union themselves. So we should see them as allies rather than always the black sheep that always has the bad news coming out. Remember, in Germany, paying a bribe was tax deductible until 1999.
Right, but I mean, Russia is, according to some surveys, Russia is one of the world's most corrupt economies, right?
Yep.
It's a Berlin-based Transparency International has said that. And but anyhow, it was fascinating to speak to you, Jochen Wermuth, founder and CIO of Wermuth Asset Management.
Thank you. Nice to see you.